All right, good morning. July 29th. Welcome to the weekly meeting. Um, Hopefully everybody had a good July. Well, hopefully you had a great July. I think I probably caught more pips this month than I've ever caught before. Uh, Hopefully you guys are seeing the moves and catching the pips. And if you're not seeing the move, hopefully it's because you're new. Um, if you've been here a while, hopefully you're at least seeing the move. That's kind of what we try to do on the weekend, is kind of detail what to expect from the market, and then you can kind of watch it as it unfolds. Um, if you're having problems, please reach out to somebody you feel comfortable with, somebody who you feel can show you the ropes. Because we all came from a place that we couldn't see, nor could we diagnose or guesstimate or any of that. Now we have several people, in the group who are, making money, who are profitable. Um, so if you need the help, we are available to you. Um, I'm going to use this week to work on that newcomer video series again. Um, so if you're new or newer, I'll be back on that video series this week. Um, I think the moves that we called out last week were great. Um, I kind of want to stick to those same lines, unless somebody else has some objections. I also want to, invite people who want to do more. You're more than welcome to do more. If you want to do analysis, if you want to, keep track of the order blocks like Selena's been doing, any and all of that stuff is encouraged, right? All of that stuff requires time, right? And you don't have to do it forever. You can do it for a few weeks. You can do it for a few months. You can do it until you start getting rich. However you however you want. Whatever, however in depth you want to go. I know Selena goes ham sometimes, where she calculates all the pips back and forth. You know, but all that stuff at the end of the day takes away your personal time. So, you know, um, Selena might be getting to the point where she needs to start enjoying some of her money, you know, spending her personal time elsewhere, or whatever the case may be. I just want to encourage others, who might be in a position to where they could do that, or who would like to get themselves into position where they could do that. It's a tremendous help to you as an individual when you start doing that kind of thing. You start seeing more. You start understanding more. You start seeing how pairs actually move, and you start understanding that how we put together these strategies in order to take advantage of the moves. Okay, so if anybody feels the need to do that, send me a DM or whatever, and we'll get you set up. Um, Last week we talked about GC, and we watched UJ go up, and I don't know how many of you caught the UJ move, but I think you had to be sitting on top of that move to catch it. I didn't catch it in one of my accounts that I was planning on catching it with, but one of the accounts I was hedged in. Of course, all I had to do was kill the hedge. But like somebody dropped that thing out of the Empire State Building or something. It got out of there. I expect for those JPYs to continue to sell based on the news events, but it's funny how the news always seems to push the pair in the direction that we see that they're supposed to go. With that being said, it was a great week for the U.S. dollar. you know, they raised interest rates. All the news for the dollar was super, super positive, and the dollar was super strong. You know, when I look at gold on this 4 hour, gold made a high, it made a lower high, it broke this low. Now it's coming back up into this imbalance, and I'm looking forward to take a nosedive here, uh, and maybe revisit these lows or this area that I have marked up down here. This is just on the 4 hour. If I look at the daily support set, you had the bearish order block. It pushed up into the bearish order block. And I'm looking for gold to sell, right? It will at least come down to this level. Maybe it'll go further. But if you sell gold and you follow the ICT talk, you know, this should be a $20 sale. You know, it should sell $20 and to at least close this imbalance here. The US 30 is another good looking opportunity for a sale. I don't normally talk about indices when I come out here, but because the setup was very clean, you know, you see the sale on a daily. If you go to the 4 hour, you got the same chalk action, right? 4 hour breaks the swing low, pulls back up into the imbalance. In this case, it put a little bit higher, but now it's pushing down. I would expect at least to revisit this order block. At some point, this zone right here is in play. And then if it wanted to go close this imbalance, the 78, I think this total move is about 700 pips, 800 pips. I don't know that we'll get the entire 800 pip move, but it is available. And if you look at the 2-week chart, it kind of suggests that it's what needs to happen, okay? When I say kind of suggests, in order for it not to leave an imbalance on this 2-week chart, it needs to come down here past the point, the 78. So it's a high likelihood that over the next couple of weeks, the US 30 will push down to this level, okay? All right, let's go over to the Dixie. All right, same deal. It was a great week for the dollar. Actually, it was a great 2 weeks. It pushed up just like we expected it to. It pushed right to close this imbalance here. Let me get rid of this wick to wick, right? Close that imbalance. Now I expect the dollar to do what it's known to do and sink. You know, I expect for this to be a drop, base, drop, base, drop, right? So everything that's happening, you know, is going to happen according to these charts. I don't know what's going to tank the dollar, right? But something's coming that's going to tank the dollar. I did see a news article here, I don't know, a couple of days ago about some Wall Street guy or some economist saying that because the Fed raised those rates, the yield curve is inverted and it's about to collapse and take out the housing market. You're going to have mortgage rates going to hit 8% for the first time in 20 years, all this stuff. Just understand that whatever calamity that's being preached, it's being preached and these charts are going to play out. So I just want everybody in the group, you know, all 24 people on this call, we understand that what we expect to see is a push up and then a drop, right? And when we say a push up, when we look at this daily chart, the daily chart is already giving us the push up, right? So let's push up to this imbalance. You know, if you believe in ICT's version of the imbalance, just, you know, he does this on a 15-minute chart. He says, look for the impulse move down and look for price to come back up into the imbalance that caused this break right here. So we want the dollar to push up into the 102 area. And then we want the dollar to say sayonara, right? If we look at the euro, because the euro dollar is almost a mirror image, the euro USD, we want to see it push down first, and then we want to see it go up, okay? And of course, we got the daily order block. It's the same sort of shenanigans. We got the imbalance down here. So let's watch it push down into this area, into this imbalance, and then it'll get up out of here. I don't have to tell you guys, or hopefully I don't have to tell you guys, that once it gets down here, right? Once that gets down here, you can set your sights on this 380 pip move to equal highs at least. At least, bruh. Bruh, I gave you 380. 380. Put you $5 in your personal account, man. You can blow that thing up. All right. This is the same sort of deal. I'm going to have to move this down. I don't see the imbalance on this chart, but I'm going to trust and believe that it's probably going to come down a little bit before it pushes up. And it doesn't necessarily have to come down a great deal, but maybe it'll just bull crap around here while the rest of them push down lower, or maybe it'll come all the way back down here. I don't know. Don't pay attention to my stop, because I use hedge anyway. But I'm not going to get in until I see it turn and push. And this is kind of a lesson that I've learned, just from my experience as a trader. Whenever I'm expecting a move that's going to pay me, in this case, 470 pips, bro, I don't need to start at the beginning. I don't have to catch the beginning of a 400 pip move, right? I can get 200 of those pips and make 50%. I can make 80% in 200 pips. I can flip an account in 200 pips, but I'm not suggesting that you guys do exactly what I'm doing. All I'm saying is, when you're expecting a move, you don't have to be the first mofo in the trade. You don't have to try to get catbird. If you're not at that level, don't worry about catbird. The back of the bus is going to get you there too. You ain't got to sit on the front bumper, on the front pew. Sit in the back seat and take the trade up. It's going to pay you the same. If you're trying to qualify an account, bruh, you're going to qualify this week. I know we got NLP. I got it, guys. Like, it's a lot of news events. It's a lot of news events. I suspect the NFP ain't going to be good for the dollar. That's what I suspect, because that's what the charts say. But if you don't want to trade any dollar pair, that's cool. You got GCAD, you got ECAD. But these are, in my opinion, very low-hanging fruit. You got the US 30, you got gold. So whatever you're looking at, right? Go in here, set alerts, right? And maybe this is not the best pair for you guys to go in and look at and try to set an alert, okay? Because in my opinion, you can't see the imbalance on this daily. Maybe you can see it on the 4-hour.
Hey, Todd.
Yes, sir.
Can you talk about why you don't see it there? I was doing this during the week with the people, and they're having a hard time seeing why you're saying that. Why is it on that chart you don't see the imbalances? And it's the wicks. I know why, but a lot of people don't know what you're
saying. For those of you who don't understand, whenever a new candle, you want to see a 3-candle relationship, right? You want to see a wick. You want to see a candle that breaks a high or low. In this case, we broke the low of this wick. This next candle when it opens up, it needs to go up and communicate or have a relationship with this wick. It needs to be wick to wick and then push out. So if you look on this daily chart, down, you want to go down to where the impulse move started. Here's an imbalance here. So maybe this is the level that price has to come down to,
right,
for for it to go up. And, I don't know, but this would be, yeah, 800 pip move is probably not going to happen, right? That's why I don't
Right.
think it's going to come way down here. But what you want to see is when you get an impulse move that pushes price up and you get this return, right? If this return doesn't bring you back to this imbalance, at some point later on in life, this imbalance is in play. So price is going to come back down, fill this imbalance, and then go back up. So whenever we're looking for a move, if I'm bullish on the British pound over the US dollar, I want to see where we're retracing to, right? So in this case, I see an impulse move, I see a pullback, right? This is a good pullback. It's a good 50% pullback. So from this level right here, I need to see an impulse move and a pullback. This one touches the 50. Then you got an impulse move and a pullback, which is a good pullback. So this last impulse move is a good pullback too. So what I need to figure out is on a higher time frame, this thing needs to pull back, right? So maybe that higher time frame is a weekly, right? Maybe there's an imbalance that needs to fill. When I look on the weekly, I still don't see an imbalance. Well, here's one way down here. But again, let me see how far this is. 300, 600 pips. Man, I don't see it coming 600 pips either. Maybe it will just come back and interact with this wick down here. I can see it coming a couple hundred pips, just not 300.
Yeah, not right now.
Exactly. We're looking for a pullback to an area that has, okay, here's some imbalance right here on the 8-hour, but I don't know how far this is. Thank you, Elfie. Okay, 195 pips. This is more realistic, in my opinion. So this is perfect, as a matter of fact. So on this 8-hour, you see this impulse move that created this high. The pullback area, the 78% is here, right? Just below the 78, probably about the 88, there's an imbalance. If you look at this candle, this green candle, there's a wick right here. You want to mark the top of the wick for this green candle. Then you have this long impulse candle. This next candle should have came back down to this black line, but it didn't. Price just pushed up. So now when price is pulling back, if we're looking for an entry, for a buy, a good place to look would be in between these black lines. Because this is where the imbalance is. And some people will say 50% of this imbalance, which is cool if you want to do it like that. So if you have a position that's a limit order that's set in here, maybe you have, I don't know, this looks like about a 20 pip stop loss. I would put my stop just below the imbalance. I wouldn't put it, at the bottom just in case the wick. But then you can target these equal highs up here, which will be about a 500 pip move. It's about a 25% RR, and just watch for price to push down. You can sell it to buy it, right? To me, this is a great looking move. And the reason why you would want to, or the reason why you would target this is if you look at the weekly, right? Actually, let's just look at the 2-week. So on this 2-week chart, we had a bullish order block. And then we had a tap into that order block. we're expecting price to be bullish. Okay. But if you understand price action, if you expect price to be bullish, when the market opens up, you want to see it go bearish first, right? You want to see the wick being created first. So we want that wick to come all the way down, tap into our imbalance, and push up. Okay. Even if it doesn't tap into the imbalance, let's just say it goes and it makes relative equal lows at this line. There's a chance that the market could set up for later, right? It can go down and make a double bottom right here and then push up. But if you're selling this, right, it's probably going to, the market's probably going to go up to this area first. Then you can sell it, right? If it turns here, that's cool. If it goes down, that's cool. But if you're selling it, you're gonna be better for it, right? Like what I mean by that is if you're selling this pair and you sell it from this black line, you'll be up 150 pips by the time it gets here to make its decision. So even if it turns, you got 150 pips in the bag. If it keeps going, you're going to get more than that. So what we need to understand is this is a 2-week move, right? We understand what's going to happen. But what we don't know is how long it's going to take for that to happen. Is the first week going to go down and then the next week going up? Or is it going to be the first 2 days that go down and then you have a week and a half of straight buying pressure? We don't know. All that remains to be seen. But we have an understanding of what we expect to see, right? So maybe you get you 110, 150 of those pips going down, and maybe you just get out the market until it starts buying. I don't know. I don't know what it looks like for you. But everybody needs to have a plan when you decide to take whatever trade you're taking. It's low-hanging fruit, but you have to execute in order for this to be actual low-hanging fruit. Okay? Maybe GU isn't the trade for you. Maybe you need and you prefer to trade EU, right? Or AU or NU or gold or US 30. I don't know. But whenever you decide that, hey, this is the trade that I'm taking, you need to go in, set your alerts, understand your analysis, and understand where you're taking the trade. And if it goes against you, understand how you're going to handle that, right? It's all part of understanding what you're looking for. For those of you who are going to continue to trade with the big dogs on this GCAD trade, man, what a beautiful trade this was and is. Okay.
While you, I wanted to say that it's beautiful how you can regurgitate the time that it takes for that 2-week pattern to develop, whether it's a 3-day lapse with a full push. People aren't thinking about that, and they need to be thinking about that. That's part of the plan. Like, it's not just the candles moving around in price and all that. You have to know what these scenarios are, and it takes being in it, right? You're in a trade. You're getting a background for yourself when it comes to navigating. Like, you have to know how to play these scenarios in your mind. But if you haven't experienced them, because you're experiencing a lot of things, but are you really documenting the feel of it, right? So that you can use it to your advantage later.
You're exactly right, OG. I probably don't emphasize that enough. There are several times that I've blown accounts because in my mind, I already knew what was going to happen, right?
Right.
And I'm trading in my mind what I know is going to happen, even though the chart isn't set up for it to happen yet. You know what I'm saying? So
yeah,
I'm trying to buy GBP CAD when it's clearly selling on the chart. And once I blow my account, then of course it hits bottom and it turns around and buys up 200 pips. So this, I'm sure I'm not the only one that this has happened to. And maybe some of you are in that phase of your trading, and I just smooth over that. I kind of gloss over it because I'm not there anymore. But I appreciate you for pointing that out, OG, because that's one of the most important aspects of trading, right? If you look at this GCAD setup, this thing pushed way down, right? It pushed way down. So we talked about GCAD buying last week, and some of y'all probably like, that damn Todd didn't know what the hell he was talking about. It's a 200 pip sell before it bought. You know what I'm saying? So whenever I say, hey man, this is the move, I never really focused on the pre-move before the meat and potatoes move, right?
Right.
But uh hopefully I'm not tripping you guys up. And I do need to come back and address, hey, let's make sure we're anticipating the pre-move, because
Right.
it's nature to me. I've been trading these concepts, every week for so long that I don't even think about this. There, I already know I'm going to sell it to buy it.
Yeah.
So I do need to be more, I guess, vigilant when it comes to calling these moves out. So I appreciate that. And for those of you who are new, uh, I trade from a higher time frame, and I'm looking at the markets from way up here, like on the 2-week chart, sometimes on the 2-month chart. So I'm calling out the major move. I'm calling the long in GBP CAD. Of course, it's going to pull back before it goes long. If all you do is throw your fib on here, what you think the pullback is going to be? Anybody for bonus? If you said 78, you're probably right?
Yes, 78.
Right here, if you had a position at this 78, you go into drawdown probably about 15 pips. You could have, your lot size could have been like, you could have had the family pack. You know what I'm saying? You could have had,
Not the family
bro,
pack.
you could have had the minivan loaded with the kids and the relatives. That's a 17, 18 pip drawdown. I like Uncle Cletus, everybody could have showed up, and you could have loaded everybody on the bus before this move. And this right here, one trade like this will change your freaking life. Seriously, one trade will change your life. This is how you double accounts, because you get in this move at the 78, you go in to draw down 17 pips, and then she turns around and put that act right on you and give you 122 pips. So whatever your lot size was with those 17 pips in drawdown, if you had a 2.0, that's a $2,000 trade.
Huh?
Bruh,
You said, did you say 2?
hey, that's two rates, man. That's a whole ham sandwich, and some chips. But y'all aren't looking at it. Okay, Tony, I'm glad you said that. Tony said she wasn't expecting the pre-move. So y'all help me help you guys going forward. And I appreciate that, OG. Anytime that we're looking at moves, all right, we have a pre-move, right? And this goes back to our power of 3, right? That's why I showed the video in this session a couple of weeks ago, because I need y'all to listen to the way ICT explains it, because that's where I got it from, right? And I might not say everything that he says in the video. And it's not because I'm trying to trip you up. It's because I have a deeper understanding of it. And it's not on dial, like it's not on callback, instant callback. So when you see the video, you're going to get some things out of that video that weren't really important to me, because maybe I got it from a different source or I had seen it before. But the things that you get out of that video will be fresh, right? Like in that video, he clearly states, if you expect a bullish move on the weekly candle, you want to see it go bearish first. Then you want to see it go bullish. If you expect a bearish move for that week, you want to see price go bullish first. then you want to see it go bearish. So whenever I'm calling, whenever I'm calling moves, right? If we're thinking that GC is going to be bullish this week, we're gonna get some pullback first. Then we'll get the explosion to the top side. That's just how it works. So in this case, we got GC. We might go up and break this high before we get a pullback. Or we may start and it just pulls back, you know, into this imbalance right here. There's a small imbalance down here, so it could come down here first, or it could pull back a little bit, or it could just push up. If it pushes up, what y'all should expect and anticipate is, hey, when we break this high, probably when we get to this area, it's going to pull back for a 78%, which will bring it right back into this area. You should anticipate that. That should be on your mind. Like, hey, when we break this high, it's going to pull back. And I just throw my fib on here, and maybe I'll sell it back down to buy it. Like if I go to this order block right here, that's what I'm fibbing. If it taps this order block and pulls back, look what this 78 is. Right down here, right? It clears this imbalance, and there's another imbalance here. So maybe I put my position here and my stop down here, or my hedge down here, or whatever, and it comes right down here. I'll sell it. Bing. And now I'm back off to the races. So we just have to understand how the pair moves. I never talk about this sort of thing because it's second nature to me. But every time that the pair breaks a swing high, there's a potential for a pullback. And you should be asking yourself, where is it likely to pull back to? There's an imbalance here, right? This is a great pullback area. This is a great place to target. There's a small imbalance. It might not even go down here to this small imbalance. It might just go into this or clear this entire imbalance, which is the top of the 78, and then push up. You have to have a plan. This is what I mean when I say, if you take these trades, you have to have a plan of attack, right? Nobody can come sit with you and trade the actual pair. You can ask these questions, you know, like, hey man, you know, when do you think it's going? Where do you think this is going to pull back? You know, it's always a good idea to look at your landmarks, right? You have a high here, you have an order block here, which is going to get some reaction. So maybe we push straight up, you know, on Sunday. Maybe it just takes off like a bat out of hell and it goes up here. And then Sunday night, it pulls back. Well, when it pulls back, it's going to come down around this area, right? And then you can get in. And again, if it comes down here, you can bring the whole family again, load the bus up. And then
So that would be our chance to get in if you didn't get in already, or if you exceeded your loss for last week, you have new opportunity for it to come.
Yeah. But you know, I really think it depends on what type of trader you are. Some people are going to get in on the initial push up, or some people will just wait right here and sell it to buy it. There is really no wrong answer if you have an understanding of what you expect to see. That's all you have to do is come up with a plan. Some people's plan is, I'm only trading the bullish move, which is fine. So you wait for your pullback, you get in. Other people's plan is, hey man, I'm always going to sell to buy or buy to sell. I'm not going to take a trade unless I'm doing one or the other, because the win ratio is so much more powerful, you know, in those scenarios. At least for me, it is. So I don't know how you as an individual choose to approach the trade, you know, but where it is right now, I would say it's in the middle, and most people will say stay out of the middle. So unless you are in this trade from down here, you might not want to get in until it does something, breaks this high, and you can sell it to buy it, or you wait for it to pull back and then you fib it and you get in and roll out, however you want to do it. I don't know that this, Selena, is this on the order block list?
For this week?
Maybe it's not. You know what? I should have let you go. I didn't even let you go over your info.
No, you're fine. No, not for this week.
Okay.
But it's still invalid. It's still a valid 2-week order block for us to get in for the buy. So
oh, no doubt, no doubt. we know it's going to buy. We expect this candle right here to be bullish, this 2-week candle to be bullish. So along with ICT's teaching, since we expect it to be bullish, it's going to be bearish first. Listen
Is
to
this
me.
the first start of our 2 new weeks? Where are we at?
Yeah. I
Yeah,
mean,
this is the start of new 2 weeks.
and
Oh, okay.
you have to know that. Yeah, we have to
Mhm.
know that, guys. We have to understand where we have an advantage. We have an advantage at the start of every candle. We got the advantage. The market can't fool us. It has to pull back. We expect it to be bearish, then bullish. So if it takes off and breaks that high, it's going to get up here and it's going to pull back. Bearish, then bullish.
Real quick,
Okay.
Todd, for the, oh, I'm sorry.
No, go ahead, TT.
So just understanding the 2-week candles, can you put your cursor on the last candle of the, okay, and then the date? So so the proper way to read this is Monday, July 17th.
Start of this candle.
TT, do you have that setting? I think you brought this up before because you didn't know, like it should on the side where the pip count is, there should be a indicator that lets you know like what's left in this candle.
Oh,
Close. That's why you can't see it now. So if the market was open right now, where pip count numbers are, yeah, where Todd is.
The same way the 4-hour candle counts down. They all
But
count.
I don't think she see that either.
You do.
Huh?
Everybody sees the count. Like they know how much time is left in the
I promise you, Todd, when she said it before, just in this particular case, she didn't realize it.
So TT,
yeah.
Whenever your candles, whenever you're looking to get into a trade, you can't see how long is left in any candle.
I never
noticed it.
Can
They're
you go
not-
to a crypto so we can see that?
You
Can
can
you go
put
to
it in
a
your
crypto?
settings, yeah.
in my
The
setting.
countdown on the settings.
Yeah.
Okay.
Because the 4-hour candle
Oh,
shows
yeah.
what's left. I mean, all the
It's
like
right
the
here.
monthly will show you, right?
You see this right
Yeah.
here, TT?
So you
Okay.
never paid
Yeah.
attention to that.
Okay.
See where
That
it
shows
says one
how many
day,
days
6
are
hours?
left in that 2-week candle.
2-week
Got
candle.
you.
It's
Okay.
over,
But
right?
every
That's why you
I don't know
candle.
why I didn't remember that.
If I go to the 4-hour candle, it's going, this tells me how much time is left in my 4-hour candle.
Mhm.
Got you.
I don't think you can trade without knowing how much time is left. This is what controls your entry.
Well, for the 4-hour, and I'm sorry, TT, I don't mean to be speaking for
No,
you. I remember you said this before, but the 4 hours, that time frame that everybody's already got drilled in their head. You
Hell
know,
no, hell no.
let me finish her thought. Let me finish my thought of how she was thinking, because she memorized that 4-hour candle start in her head.
Okay,
And that was
so
natural for her.
I got
But for
you.
the,
So when
Yeah.
do you enter? So when do you enter on the 15-minute after you get that 4-hour bearish order block? When do you enter?
I enter on an alert. So it's not necessarily on the 15. If it hits the particular alert
Okay. Hey, if y'all
on
want
the
to,
fib level.
I know that you can probably find some success, but if you want real success, you have to be nuanced about what you're doing. You have to be deliberate about what you're doing. If you want,
Well,
like,
yeah, that's why I'm here.
if you want dialed in results, you need to dial in to your trades. When you get this bearish order block, you're expecting the next candle to push in, right? When it
Yeah.
pushes in, hopefully you're dropping down your time frame, 15-minute, 5-minute, whatever the case may be, right? Hopefully you're dropping down, and when it comes in, you're looking to see either a push down, right? To get your chalk, right? And then when it comes back, you get in for the sell, or you're looking for your bearish order block on this 15-minute time frame to where you would enter for the sell, right?
Mm-hmm.
Hopefully everybody is doing that. Hopefully everybody's doing it.
Well, I've been doing it through with the fib and the alert, because when you're driving, you can't always do it that way. look down at the 15-minute and everything. But yes, absolutely. Like, this is why I'm here, to understand more, refined ways.
Yeah. So to me, the candle, if you understand your candles, yeah, like what time they close and whatnot, that gives you the advantage.
Yeah, and plus I'm on the East Coast, so it's easier for me to understand the 4 hour, like 9 o'clock, 1 a.m., 5 a.m., but yeah.
And then in speaking the fact that I do know when the candles are starting those times, I jumped the gun on posting. I just realized that I'm posting the 2-week candle order blocks, but I'll correct it. But I totally jumped the gun on that. So my bad.
12 minutes. Okay. Yeah.
I don't think they're gonna change, but still, I jumped the gun.
It's a beautiful conversation to have because people are still in the back sometimes, and they need to hear this type of conversation because it'll answer.
Because there's a lot of stuff about TradingView that you think people know because we know, or just like OG, how you trade and how Todd trade. Sometimes you're so good at what you do, you think it's second nature to someone else, and they just don't know.
Yeah, that's why I have to be careful that I don't show disappointment or show frustration when people don't understand. I have to have the ability to explain things 1,000 times on top of 1,000 times with no problem. I have to look at it like it's my job, and I do pretty good with that. So any questions, I'll answer them over and over.
Appreciate it.
Mm-hmm.
OG growing.
Hey.
Is Todd back there cussing us out on mute or what?
No,
Probably.
Yeah.
Probably.
I think these are great great conversations too. If I get frustrated, it's I need to check that too, I guess. But
I don't think anybody believes you get frustrated. Everybody knows the passion that you have, and we've all been, well, new people may not understand, but most of us has been, around you long enough. It's more of a passion that you want everybody to succeed, and it's almost like a father having high expectations of their kids, and you expect things, especially when you've said stuff over and over again. Some of the stuff you shouldn't have to repeat to us, but sometimes it's just that way. And then with the influx of new people, but like you say, it's just certain things that we may not grasp the first time. Like for me, I couldn't understand a buy limit and a sell limit forever, and then one clicked, so
Yeah.
Mm-hmm. Yeah. And also, Todd, you're constructive. So it's not like you're just putting people down, you're constructive with it. So I appreciate it. So, you getting on us, I'm like loving it. Oh, okay, yeah, I forgot that. You have to remind me. So as long as you're constructive, keep on going.
I shall. I appreciate it.
It's all good. You can cuss me out every week. I'm used to it.
all right.
Hey, somebody asked about the fib and the time frames. Market structure is the best way to determine when you can use the fib. I would say when swing highs or swing lows are broken, you can always break it out, once the candle starts to pull back. It's going to be different for different levels. If you're trading a 15-minute chart, you can get a fib pullback if it breaks a 15-minute swing high. So you can fib that 15-minute structure. You can fib on the daily, you can fib on the 4 hour. It depends on what chart you're trading, right? If we're looking for a weekly pullback, we need to break a weekly swing high or whatever, swing low, and then we can see it pull back on that level. It can be somewhat complicated or overwhelming for a newer person trying to understand when to use the fib and what level. But if you stick to the structure and breaking the swing highs and swing lows, then I think you'll have a better understanding.
So I have a quick question about what happened last week. And OG posted something. I think it was with odd OG. You posted something about it was reaching the level to start selling, like over. It was like overbought or something. Like, so I saw a few pairs like break the bigger structure. And so that had me wondering and nervous, like, dang, is like correlation wise, like, is GCAD gonna break too, you know, towards the downside? You know, when your pairs start breaking structure, then you just hold off on, like, it kind of mess with your psych a little bit. Or can we talk about that a little bit?
What, because of the volatility?
No, because of like maybe you had a 4-hour structure, like the bottom of the structure is like your bottom, like this. If it goes past this, it broke structure. And so when it did that with those few pairs that we were watching last week, AJ, yes, AJ, that's what it was, AJ, and not gold, it was another pair that it broke structure to the downside. Maybe it was GA. Oh man, I can't remember. But do we still anticipate, or do we not anticipate for other structures to break those 4-hour patterns as well?
I think that's a rabbit hole, right? I'm posting pairs, right? And they're multiple: AJ, GJ, Euro Chef, Ethereum. You know, I'm married to those charts, right? So for someone who's not married to those charts and they're just jumping on any pair that they think is going to give them a move, you don't want to get stuck in a rabbit hole trying to chase down pairs. Because I'm trying to see a correlation. Okay, you're trying to anticipate that maybe this pair is behind those pairs and it's probably going to do the same thing they did later. Yeah, that's true. But how far into the rabbit hole are you willing to go to find out if that's true? So I know that pairs are wavy, like all the JPY pairs. Some of the JPY pairs are ahead in the move, and then some of the JPY pairs are following behind, right? There is a thing with that, right? So, but you won't understand it until you forward test that. I can tell you all day, but you got to see it for yourself. Yeah.
So don't get caught in that rabbit hole. Just focus.
This is what I call being married to the pair. Knowing the price is number one. You need to know the price of gold. You need to know where the dollar's at, and you need to know where Bitcoin is at. Once you understand those, everything else falls in line after that. Now, and that's just worldview, right? But currency is currency, indice is indice, metals are metals. Like, you have to go into those realms, right? So it's going to take time for you to get comfortable being within each of those, because once you're good at one of them, you can master all of them.
Yeah.
Currency is currency. It's not like Bitcoin and crypto. Crypto is going to go parabolic for real. Like, currency is going to still stay within its balance. It has to go to support and resistance. Crypto is going through resistance and not coming back. So be real clear about that. If you can catch Bitcoin or Ethereum at the bottom of this structure down here in a trade, you're never going to come back down here in these prices again. And you really want Bitcoin, because that's the one going to 100K. So Ethereum's going to max out at 5,000. but Bitcoin's going to 100,000 and then 200,000, then 400,000. Like if you catch a trade on Bitcoin, oh man, your life's going to change.
Mm-hmm.
Mm-hmm. I mean, a 0.01. Come on now.
Yeah, those Bitcoin prices be so crazy out the water though.
Yeah, it's got a 50-point spread. So that's the average spread on Bitcoin. But look, think about it. If Bitcoin's going to 100K, which probably it is, then 30K right now, let's say it don't go low no more. It wants to go bullish. All right. So it's got to go over 30K, come back and retest 30K and go bullish. Right. Or it's going to drop to 20K. Great. We got it on sale. Drops to 17K. Great. We got it on sale. Wherever the low is, if we get that opportunity again, and best believe we're going to be talking about it. So when it shows itself, I'm not going to shut up about it. So if I see it, everybody's going to know.
Mm-hmm.
Mm-hmm. That's my soapbox. I'm done.
Those are good prices. I mean, Bitcoin did come back down to what, 18K last year? What?
Right.
What was that?
15.
Oh wow, came back to 50. Yeah, it went pretty low. But yeah, that's what those that the psyche in once your pairs break, once your pair that you're trading, or if you're trading one or two pairs for the week breaks your, like your stop loss or whatever, it breaks your last line of defense. The psyche behind keeping your analogy for the other trades that you have, as a setup, keeping that in order, keeping that in line.
Well, what people have a hard time with for some reason is that the reason why I'm catching the trades like that is because I'm doing it the same way on every pair. I'm just putting my entries where they go, right? Once you know where they go, that's why using the 78 is so important. And then I add the quarter level to it. And the quarter level seems to always, well, not always, but most of the time is around the 500 quarter, right? So if the 500 quarter and the 78 are together, I'm golden. And I just proved it, right? And I prove it over and over again. When you see me hit like that, and look at the number. It's 500 or 750 or whatever. It's quarter levels, right? In the highest volatility, I can still do it. But everything's based off of 78% retracement. That's what you're supposed to be looking for.
Got it.
Mm-hmm.
Thank you.
Mm-hmm.
All right, the last one I wanted to talk about was this EC, which is kind of in the same boat as GC. I expect bullish action, the same way. The setup is very similar. All right, the weekly I think we'll push down again. Maybe we'll come a little bit lower. I looked at the, 12-hour and the 8-hour. There's an imbalance that can still be filled down to this area. We have a bullish order block. We expect a pullback. Maybe it respects this area. Maybe it doesn't. If it does, that's cool. But if it doesn't, this is the next lower imbalance, all right? This one ran into a 12-hour OB. So if it just retraces this order block, it's about 54 pips to the top of the order block. 102 or 103 pips, to the bottom of the order block. Maybe it does that before it pushes up. Maybe it comes all the way down 150 pips or so. to close this imbalance and then go back up. Whichever ones that you guys are trading, I would just watch it, be confident, understand what the possibilities are, and don't over leverage, and you'll be fine. I think it's clear that they will buy this week. We just don't know the exact date that will start. You guys have any questions over there?
No preguntas.
Anybody else trading any off the wall pair? I know somebody is. I know somebody is.
Euro F. Hey.
The dude said Euro Chef. Does the charts look any better? This
Man, that hey, look, if it goes down to 95 cents, I'm telling you, you catch the buy at 95 cents. That looks like the bounce point. I got it at 95,250 right now. So if that's the low, we're good. But if it wants to dip down one little step further, hit that 95 on the money. Ooh.
Let me see this ugly chart.
That bullish order block look.
It went right to the imbalance.
That's right. It's perfect 78.
Me encanta. You bought this?
Yeah, it's strong, but I know it's still gonna pull back. So I'm gonna try to trap it. Hopefully it gets above and breaks those highs first and then comes back.
Yes, I agree. I don't know. Nothing in me will allow me to trade one of these chef pairs. Not with all this other low hanging fruit. No, I mean,
Alicia put me onto it, so we've been following for like 3 weeks, and it finally went down there. We saw it coming down there, so it did exactly what we wanted it to
Alicia
do.
probably in this too, huh? Is Alicia in it?
She probably missed it. Oh man,
Prince, I didn't talk about GA.
I'm gonna probably have to send Alicia some money for putting me onto this one.
Please send Alicia some money.
She needs to get paid for her analysis.
Hey, Prince.
What's up, Todd?
It's going to pull back. I would look for it to come to this blue area.
Yeah, I was thinking that too. A pullback first.
Yeah, I like others better than the GA, but GA will definitely pull back first. Let me look on the 4 hour. 4 hour. 4 hour. About 220 pips to close that inbounds.
That's a nice pullback.
Yeah, it will be. It will surely be a nice pullback. Man, Kanta.
Yeah, I think I'm gonna be looking at this trade throughout the week.
Whatever, loser. I gave you the trade to look at. Man, Anybody else trading anything crazy like GN?
I traded GN
No,
and made money.
well, yeah, but are you trading it this coming week?
I don't know yet. I don't look at my stuff till Sunday.
You don't look at it until Sunday?
Right. Early Sunday. Well, 12.
Shoot. EN is gonna go high. GN is gonna go high. I like it to go sideways. So. All right, let me stop this recording since y'all, as a matter of fact, Selena, you can go over your order blocks.
Okay.
If you want to.
Sure thing. I did put a comment in Discord that I jumped the gun on the order blocks. So I greatly apologize for that for the 2 weeks.
So you jumped the gun.
On the 2-week order blocks, we got one more day left.
Oh,
I don't know what I was thinking when I did that, but I did. So, hey, I apologize.
where? Hold on. I disagree. Where do you think we got 2 weeks? Where do you think we got one more day left?
On the 2 weeks?
Bitcoin?
Wait a minute.
Bitcoin only has one more day because it trades every day.
That's right. No, I did that right. Never mind. I'm losing.
These regular order blocks were done on Friday.
That's right. Right. I don't know what I'm thinking. I don't know. I'm off.
Yeah,
I don't
well,
know.
maybe you're talking about like the monthly.
Yeah, I didn't do the monthlies.
Because the
Okay,
monthly has a couple of days.
days. Yeah,
2 weeks. No, 2 weeks is a wrap.
I'm good. Okay, I was right. All right, my bad. I'll delete my comment. All right, let me know if you can see my screen.
See, May and Kanta.
All right, so this was my analysis of the JVs. I mean the JVs. Lord have mercy, I'm talking about work. The order blocks from last week. AJ did as projected. This is one of those where it's get in for the sale and you sell it until buy. There's a 1 hour bearish order block Sunday at 9 p.m. Eastern. If you had a short position, if you choose to do a stop loss or a hedge, it covered the equal highs of roughly 50 pips. If you didn't cover those highs, you would have got kicked out, but you could have gotten right back in. Possible 357 pips for that one entry. AN, same thing. It gave a bullish order block Sunday night at 9 p.m. It brought up to cure the imbalance on the 1 hour from the 22nd of June. Once price filled that imbalance, it began to sell. There was also a 4 hour for those who like to wait for a 4 hour order block, a bearish order block that we knew it was going to clear the imbalance, in which it did. It brought up to clear the imbalance. You could have put in a short position, covered that imbalance with a stop loss or hedge. It was only 18 pips. You could have held this position all week for 118 pips. That was a 6% trade. CAD JPY, it projected. It did buy up a little bit before it began to sell. There was a 1 hour and a 4 hour bearish order block at 9 p.m. Eastern for entry for the sale. If you cover equal highs again, you would have needed a stop loss for 60 pips. You could have held this trade all week for 298 pips, a 5% trade. Chef JPY, God's plan trade. There was a bullish weekly candle from last week that needed to retrace. There was a 4 hour bearish order block 9 p.m. Eastern Sunday night for entry for a stop loss hedge of 40 pips. Possible 475 pips, a 13% trade. Euro JPY did as projected. Price gave a 1 hour bearish order block at 10 p.m. Eastern Sunday for a short position for a 30 pip stop loss or hedge. possible 615 pips, a 22% trade. GCAD did its projected price, gave a bearish order block 10 p.m. Eastern Sunday night. Stop loss or hedge, whatever you prefer, 38 pips, possible 446 pips, 12% trade. GN did its projected price, gave a bearish 1 hour order block Monday at 3 a.m. Eastern. You would need to find a good entry on a lower time frame for this particular pair with a 60 pip stop loss, a hedge, possible 227 pips, 4% trade. NZD CAD price tapped into a bearish order block from May 23rd. There was a 1 hour bearish order block at 9 p.m. Eastern for entry, 27 pips stop loss hedge, possible 316 pips, 12% trade. NJ price brought up to the weekly golden zone for 72 pips, then created a bearish 4 hour order block Tuesday at 9 a.m. Eastern for a short position with a 30 pip stop loss hedge, possible 275 pips, 10% trade. NU price gave a 1 hour bullish order block 9 p.m. Eastern for a buy up to the weekly golden zone, 20 pip stop loss hedge, possible 102 pips, 6% trade. Then for the sell, price cleared an imbalance from July 20th on the 1 hour, possible additional 155 pips. That's all I got. Yeah, that's it, Todd.
Gracias.
Let me go ahead and delete my comment.
We have any questions? Speak now or forever hold your peace.
I did want to say, Todd, no questions, but there are the order blocks that's still in play from previous 2 weeks, just like you're talking about GC and UJ. So, you know.
Oh, did we go over UJ?
We're gonna be in play for the rest of for about 2 or 3 more months. I didn't talk about UJ. I mean, I talked about it. I talked about how fast it got out of Dodge last week, but you know, I dropped some info in the news folder and in the JPY thing, I think, about JPY's cooking.
Copy.
It's not just UJ. It's going to be every freaking J.
Yeah, a lot of the 2 week order blocks that I was looking at, the same thing you were talking about with GC and EC, how these past 2 weeks, it basically did the retracement, and now it's beginning to go in the direction whether or not it was a weekly or bearish order block. It's like they're now in that position to do what based off of the order block and not the retracement. So
yeah, if y'all remember that initial drop, this initial drop for UJ.
We can't see your screen, Todd.
Oh well. Too bad. Y'all missing out on that bonus coverage. Y'all should really tune in.
Well, if you show it to us, we might be all right.
Oh, y'all. Oh, it's me. It ain't y'all. I thought it was y'all.
It's you.
So if you remember this drop right here, this ferocious drop, we got the base. We're about to get another ferocious drop, So
definitely like you, Jay.
Don't wear your good draws because this drop gonna cause some spillage. Target these lows down here. But yeah, it's gonna be a crazy roller coaster on the way down. It's not just UJ. You can look at every J except for Elfie's favorite J. Okay. The rest of them J's, you can get in and lace them up because they're gonna cook too. Elfie's J, just leave it alone. Don't worry about Elfie's J. Just act like it don't even exist. It's going the wrong way, y'all.
What's funny is UJ always go up too.
Well, listen, y'all got to understand the dynamics, that are in play though. The dollar is under siege, so to speak, right? So the dollar is dropping, so UJ is going to drop, along with the dollar. And this is fine. It's just a regular pullback, of the US dollar. you know,
Is that a little bit?
we're treating it like it's the collapse of a country, and that's not the case. The dollar made record advances over the last couple of years.
Well, where Kim at so she can give us the GJ?
Kim says she missed her GJ entry, I think.
She did.
You know, it's all good. This, you know, when you trade, we're not going to be 100%, and nobody should expect to be 100%. If you're expecting to be perfect when you trade, yeah, just not. You know, it's not going to happen, right? But you could be horrible. Your execution could be horrible, and you're still going to make more than your day job is paying you.
Okay.
All we have to do is keep anticipating these moves, right? All we're doing is looking at the chart, understanding what needs to happen, taking the low-hanging fruit, right? And here's what I mean. This 2-week candle doesn't look as attractive as the UJ or the CAD-J 2-week candle. So I'm taking UJ or CAD-J. I'm not taking GJ, right? Now, when you start dropping down in your time frames, then maybe you get more attractive options. There's a weekly bearish order block, you know, but you have to take the trade that is in your advantage as a trader. You'll get rich doing that. Don't take the trade just to see how good you are. That doesn't make very much sense. You know, like even in the wild, you know, as powerful as lions and tigers and all that stuff are, they don't go attack the elephant. They go attack the rabbit or they go attack the easy prey. They don't go and fight the badger. They don't try to attack the badger unless they starving to death, because that badger is going to fight back. I want to attack the bunny rabbit that's going to just die, you know, as soon as I bite him. And that's the same way trading is. It's a reason why I don't just jump into the indices. It's not that I can't trade the indices. It's more of a challenge to me because it moves faster, but it's the same setup in the same way. I choose to trade the lower hanging fruit. I can use a heavier lot size. It happens over time. You know, I'm comfortable over time. I don't have to have all my money today. I'm not going to spend it anyway, you know, so other people like the indices, you know, that you like the faster action, all that great stuff. All I'm saying to you is understand who you are and use that to your advantage. Don't give the market an advantage by getting outside of your comfort zone or doing something that's uncharacteristic. Just take what the market is giving you. If you know you can trade this trade to equal lows, trade it to equal lows, even if you think it's going further. Because equal lows is the guarantee. The other stuff is the bird in the bush, right? It's the person promising you the big promises that ain't gave you up nothing, you know? So we just have to understand who we are as traders and where we are in our journey. And we can make bigger strides to be a better trader tomorrow. We don't have to be great traders in order to run up a bag. We just have to understand direction and then how to enter. You know, if you enter at the 78 and you understand the direction, you're going to make more money than you can think about. Trust me. Even if you don't drop down time frames, if you just put your entry at the 78. Last thing
Probabilities. Got to keep doing it the same.
Exactly. Wash, rinse, and repeat. The last thing I want to say today is, this is July 29th. There's a lot of competitions out there. Get in the competition. Take a chance. I haven't won one yet, but I like taking them. you know, it's a lot on your plate. You know, I trade a lot of different accounts, you know, but it's something that I love, you know, and in the competition, you know, all you have to do is place. I know that TFT competition again, you know, if you get 20%, they're gonna give out a 10K challenge. So just, you know, I would enter as many as you can. You know, maybe it'll save you money. Maybe you'll get an account with one of them. It just takes one account or one breakthrough.
It keeps you busy. I mean, you have something on the line. I trade multiple accounts too. It'll give me a breather from my major accounts because I'm really swing trading almost all my accounts. But I can walk away from those accounts and do these challenges, these competitions, and try to gain an account, try to hone in my skills. And if I get into an area that I really like in the challenge, in the competition, I can go to my other accounts and do it there too. So it's your job. These are all the aspects of your job, right? Being versatile. You always want to have something on the line. That means your feet are in the fire. You're applying a little bit of pressure to say, hey, there's a goal that I'm trying to accomplish here. But you want to, through reverse psychology, make it a good thing. If you fail, it's not a bad thing. That's the beauty of a competition, is that you didn't pay for anything and you have the opportunity to win something. So when you lose, yeah, it's a slight disappointment, but did you do everything correctly? No. Okay, do it next time. And you get to the next time, you remember what you did last time, don't do it this time. Do something different, right? There's really only one way to do it, and that's the right way. So, and there's many right ways, but you got to tap into that and be consistent and proficient with it.
All right, anybody got anything else? Greg. Anybody? Going once. Going twice. Everybody comfortable. Everybody know what they're trading. You laughing? I mean,